This is 20 Minutes Live. Welcome to all of you from India and around the world. I am Ninad Karpe, partner at 100x.vc. Today on 20 Minutes Live, we have Utpal Sheth. Utpal is the CEO of Rare Enterprises. He has more than 2 decades of experience across the entire spectrum of the capital markets. With our overarching theme of what next, Utpal will speak on capital market scenarios. As you're now familiar, our format is simple, unique, and crisp. Utpal will speak for 10 minutes, and after that, we'll have a round of Q&A for 10 minutes. If you have any questions, please put them in the box on your screen. Over to you, Utpal, for your 10 minutes of remarks.
Thank you for the kind introduction, Ninad, and thank you for inviting me to this session. Good evening, friends. There's been enough and more discussions on how the COVID scenario will play out. And rather than basing an assessment of capital market scenarios on a view with regard to the economy in this highly uncertain time, I thought it would be most useful to create multiple scenarios. The first scenario that we are now considering, which I call as the optimistic scenario, is where we have moved, that life comes back as we knew it earlier, latest by the end of June. The second scenario, which I call as the realistic scenario, is that life comes back as we knew it earlier by end of September. And the third scenario, which I call at this point of time the pessimistic scenario, is that life comes back as we knew it earlier by Q4 of this year. In these three scenarios, I think the economic implications will be dramatically different. Let us go for the optimistic scenario first. I think the equity markets are factoring in the optimistic scenario at this stage. And if it needs to be recalibrated to either the realistic scenario or the pessimistic scenario, we will see that recalibration in the markets leading to some lower rises. I believe that at this point of time, the indices are not very representative because they are highly correlated to the top 10 stocks. The second scenario, which I call as the realistic scenario, will have significant economic cost attached, and it remains to be seen whether this economic cost is borne by the government or by the private sector and the household, or by the financial system. We have been waiting for the economic stimulus or fiscal support since the lockdown has been initiated. And whenever it does come in, we will have to see how significant it is. Irrespective of how significant the economic stimulus is, one will have to be very, very cautious and prudent in building their portfolio and their stocks. I think that we are now in a scenario where it is only the leaders or the strong players in each sector who will be standing tall. And I believe that they will become stronger. The weaker players in each sector will be significantly hurt, if not imperiled. That leads us to an investment approach where you will need to look at concentrated portfolios, and you will need to look at leaders being part of the concentrated portfolios. The adaptability of those leaders will also be very essential. And while quality of management is always important in any investment approach, I think it will become paramount in these uncertain times. Going to the last scenario, which is the pessimistic scenario, can actually put India back quite a few years in terms of its progress. I think not just GDP growth rates, but also our per capita incomes and consumption patterns, and there will be forced deleveraging both at the corporate level and at the individual level. So that could really lead us into a long economic winter. And I pray for all of us that that does not come to pass. In each of these scenarios, I'm presuming that there will not be a second wave, which will lead to a second round of shutdowns, etc. We should all be clear that we are facing this once in 100-year scenario for the first time in our respective lives. So, prudence is the name of the game insofar as asset allocation is concerned. And insofar as stock picking is concerned, I would say that stick to the leaders. I would very much like if the valuation of the leaders is a little more favorable to investors, but it is what it is. One must not lose sight of how, beyond whichever scenario we are considering, the next 5-10 years will evolve. To my mind, we will see decades of lower competitive intensity going forward. We will see decades of, or many years of improved pricing power, many years of higher entry barriers, many years of better return on capital employed and return on equity going forward, many years of prudent capital allocation and capital structures by corporates, because everybody's return frameworks and everybody's risk frameworks have been revisited. And for each company and each management team, I think their adaptability will be at a premium. Business models, revenue models, pricing models, customer engagement paradigms, a lot will change. But it's not as if this change is only because of the current COVID scenario. I think a lot of these changes had already been in motion. But as Ruchir Sharma has said, that the COVID scenario will accelerate this change. And in fact, Satya Nadella of Microsoft has gone ahead and quantified it. He's mentioned that we've had more than 2 years of technology adoption happen, or digital adoption happen in these 2 months. I think those companies that will survive these difficult times will emerge far more stronger and far more valuable. Those companies which emerge from this will create a lot of value going forward. As they say, the only thing to fear is fear itself. So it would be a balance of prudence and vision that I would recommend for all investors at this time. Ninad, over to you.
Thank you, Utpal. Crisp 10-minute comments. The only thing to fear is fear itself. I mean, there's so many interesting things which you mentioned. Very, very amazing insights. There are a lot of questions. They are in front of me. I will start taking them. Mudit Jain is, a controversial question, and you can respond to him quickly. He's saying stock markets and the economy are totally disconnected. Do you agree or disagree?
They appear to be diverging at this point of time. So, as Warren Buffett has said, markets are a voting machine in the short run and a weighing machine in the long run. I think in the long run, they will converge again. I wouldn't be worried. It's better to look for specific opportunities than worry about where the indices are.
So there are a lot of questions, Utpal, on debt market. How do you see the debt market?
I think debt market has gone through one of its most tumultuous times in the last 2 years since the ILFS issue happened. Having said that, I feel that some of the outcomes are better, some of the outcomes were avoidable, and some of the outcomes are very much desirable. So, what was avoidable, there's no point in looking into that at this time. But the things that have improved is, I think, financial discipline in the country, in the corporate sector, and even at individual level, will be at a new high. And uh, the depth of the debt market with regard to credit papers was pretty shallow earlier. I'm seeing some improvement there, not as much as I would want, but we are definitely seeing improvement with regard to that. And lastly, I think this whole debt market challenge has motivated RBI to come in and play a far more proactive role uh, now than it has ever played earlier. Though I would have been happier if RBI could have been more proactive beginning September 2018, but let's not cry over spilt milk.
Sure, sure. Let's not cry over spilt milk. So there are some specific questions on industries. Maybe you can broadly respond without referring to companies. Yasmin is asking about pharma and direct consumer industries. Will they benefit because of this? And Subha Bangera is asking about why is India not the world's largest food processing factory of the world? It's got so much potential. Some quick responses to these three sectors.
Okay, pharma clearly seems to be in the flavor at this point of time. And I see that the potential for Indian pharma is quite a bit given the changing global scenario. With regard to food processing, we've always had that potential. So I've never understood why India has not been able to make it. And let me not get into that. Let's leave it to the policymakers. Which was the other sector, Ninad, that you mentioned?
Pharma, direct to consumer sectors. So
Right.
direct, FMC, whatever companies who are
Understood.
got online mode, yeah.
Right. So I think direct to consumer sector will come back. It might take a little bit of time, but I don't see India's consumption appetite going down. It may be calibrated because recent years we've had significant increase in household debt to GDP, and I feel that given the dislocation that has happened because of COVID, we will see people being far more reluctant to take on incremental credit.
So, Utpal, you need to speak a little bit about mutual fund debt funds. Obviously referring to the recent you mentioned about tumultuous events, and there are a
Hmm.
couple of questions. People are asking what are the alternatives. Should people do direct lending? What are the alternative investment to mutual fund debt funds? Should we
Okay.
still people should still have, believe that that's a great form of investment? Was it one off? I mean, just a quick view on that.
Okay. I would like to make a distinction between debt funds and credit funds. The recent challenges that we've seen have been in the credit funds and not across debt funds. Within debt funds, we have ranging from liquid funds right up to income funds to gilt funds and so on. Credit funds is a very small part of the total debt fund market. I believe that it makes a lot of sense for investors to continue to pursue mutual funds both in equities and in debt. And mutual funds serve many objectives for these investors. So I would not be upset with the current scenario. And I think it is wrong to paint all mutual funds with the same brush. Uh, this whatever has happened is unfortunate, but you must recognize that Indian banking system has NPAs of 9.5 to 10% at this stage. At peak, it had gone up to 11.5%. It would be wrong to assume that mutual funds will have zero credit loss.
Sure, good. I think a very, very straight, forthright answer. I'm glad you took them head on. Again, there are some questions on auto sector. What is your view? What will happen to the auto industry?
Right. So I think the passenger vehicle and the commercial vehicle segments will behave differently. I feel that passenger vehicles might get some boost because of people's need for individual mobility rather than the trend that was moving towards shared mobility, right?
Correct.
But again, as I said, credit is not going to be easy, and therefore we will have a slow recovery even in the auto. But nevertheless, I am more positive about passenger vehicles than commercial vehicles.
An interesting question is, what is the right strategy to remain fully invested or sit on cash? He's saying, the gentleman, Warren Buffett is sitting on 130 billion cash. So what is your advice?
Okay, but you should also see what is the total investment value of Warren Buffett, and then look at what percentage of cash is he sitting on. I would recommend that don't think of either fully being invested or fully being in cash. There are many shades of gray in between, and prudent, disciplined asset allocation is probably the best way for individual investors and even institutional investors.
Prudent, disciplined way. I want to ask you a question based on one of, you mentioned about investing in leaders, quality of management being important. How does a lay investor, you are glued to the market, you track it closely. How does a lay investor figure all this out? What is the way out for a lay investor?
Being glued to the market is not necessarily the best way to find quality leaders and quality management teams. You can see it even from a distance, and in fact, it helps you to, sift the noise from the signal, and the signal from the noise. So I think one should not take that as a handicap at all. If anything, you should take that as an advantage. I feel that in this new age where disclosures are so good, companies interface with investors and put everything on their websites and on exchange websites and so on. Investors are very well positioned to take these calls, and you have to take these investment decisions very few times in a year. The lesser action that you have, the better long-term rewards you get, is my belief.
The lesser action that you have, the better long-term rewards. I'll just take last two or three questions, then wind down. There's a question from Yagnesh. He's asking, when will we see return flow of FI? When will they start investing in India again?
To me, it's a relative. I mean, for the FIs, it's a relative opportunity game. Forget what is happening in the immediate context, but in the longer term context, I think the US, China, and India are going to be the three largest markets. And it would be inevitable for FIs to have a respectable allocation in each of these markets. While we may be the smallest of these, we do have the potential to be, hopefully, the fastest growing of these. Right now, of course, talking about fast growth seems like a distant dream, but it's not always going to be like this. I'm sure happy days will be back.
So I mean, I have a lot of questions, Utpal, and I would like to wind it down next couple of minutes. Your quick view on the NBFC sector.
The NBFC business model has been badly exposed and vulnerable at this time. I think NBFCs will have to reinvent themselves to become more relevant. And NBFC valuations had become unrealistic. It's easy to say this with hindsight, but I do believe that there is no point in talking about NBFC valuations until the NBFCs have reinvented themselves.
So Rishabh is, after me to ask you a question, so I have to ask. This is the third time he's asked. What is your view on agrochem and specialty chemicals industry?
Okay. Clearly, these sectors stand to benefit if, with realignment of the global supply chains away from China. But it is also imperative that the Indian leaders in these sectors are able to scale rapidly. So far, they've done a good job, but to go to the next level, they will have to do more. I'm sure everybody's hoping that they will rise to the occasion. But there is a big opportunity there.
Okay, big opportunity there. Utpal, I can't let go of you without asking one small personal question. You have been at home lockdown for 40 days or thereabouts. Is there any one good habit which you have started in the last 40 days? Something new, something which you didn't do before, or you've outside of capital markets?
No, I haven't started anything new, Ninal. But this lockdown has been a blessing. It's helped me get a lot of quality time with my family,
Great,
um,
great,
much more than in the past. And I think it's invaluable. So I
great.
am complaining about the lockdown. And given the technology enhancements that we all are working with, it hasn't hurt work as much as I had thought it would. So I'm seeing a very good balance between work and family life at this stage.
Work-life balance is what you have reinvented. Good. I hope it goes on. Would you like to give a last some closing comments, and I would then wind it off? Just some closing remarks. Just
I
one
would
minute. Yeah.
I would leave you with the thought that in every crisis there is an opportunity which is embedded in it. Um, we will look back 10 years from now as this being one of the greatest opportunities. How we play it is very important. Be clear that you play it for leaders who will compound for 10 years rather than looking for a valuation arbitrage at this point of time.
Great. Be clear. Look for leaders over a 10-year period. Thank you, Utpal. Thank you for joining. We're delighted you could come on 20 Minutes Live today and share your thoughts. A lot of questions are there that shows that people want to listen to you, respect your view, and look forward to your thoughts. I hope we can engage with you sometime later, in the year. And all of you viewers, thank you for joining 20 Minutes Live. Remember, 20 Minutes Live is every Thursday, 5 p.m. Thank you. Thank you, Utpal.
Thank you, Ninad, and thank you to your viewers as well.
Thank you.